Ajay Srivastava is with us, Chief Executive Officer at Dimensions Corporate Finance Services. Ajay, good to have you with us here. Thank you for your time. Just if you want to start with the news around IIFL Finance and, of course, some of what I was saying with regards to gold finance companies, especially the rally today on Muthoot and Manappuram.
Well, I think, as I said, this is the second curveball to the investors by the Reserve Bank of India at the end of the day, because banning a business means that a lot happened before that. And I think that's a worrying point for investors, is that there are no warning signs from either the companies or from the Reserve Bank of India telling the people, listen, this company's got problems. Till your final sledgehammer arrives. So I think all it tells us is that I think the middle class or the middle scale NBFC space is at serious risk at this point of time, because any regulatory action is now coming in the end, which is banning the business or taking the license. So I think from investor standpoint, more than IIFL, more than gold finance, I think the story is now emerging that there are serious regulatory risks running in the mid-cap space of NBFCs at this point of time. And one needs to be cognizant of it, that today it could be a gold loan, tomorrow it could be the share advance against shares, the after could be the LAP loans, which are the most popular loans. So I think broadly speaking, Prashant, I would say that from purely in a regulatory action standpoint, the NBFC space, the mid-cap NBFC space, is now at a serious risk of being invested into by people and holding on. The cuts are deep and large. So I think there will be a move gravitating towards the larger NBFCs at this point of time, which are of strategic importance. NBFCs, their RBI can't do what it does with this smaller segment. And I think the lesson here is just not the gold. I think the lesson here is that the mid-cap NBFC segment, I think it's a serious investment risk, is the regulatory aspect coming to play. So, well, some of the companies will get better of the gold people, because if IIFL Finance goes away, the volumes will move to somebody else at that point of time. And it's a business which requires daily people walking in and giving their gold to take the money. So it's not something which will transition over time. So I think the benefit to others is going to be immediate, absolute, and starting to today itself. So to that extent, share price reflects what's going to happen. And but I think broadly speaking, from investing standpoint, mid-cap NBFC space, I think, is now becoming a minefield. Next one, which one blows, one doesn't know.
Okay. Well, Ajay, hi. Good morning. I want to talk about Tata Motors because it's hit a fresh record high right now. And it's not just about the demerger now, right? I mean, if you map the trajectory in the last 3 to 5 years, in fact, ever since N. Chandra came on board as the chairman, a lot of positive steps have been taken in Tata Motors, whether it's deleveraging of the balance sheet, making sure there's subsidiarization of the businesses, getting a specific, vertical heads to come on board, and now finally the demerger. Do you think there is more value unlocking from a shareholder standpoint? If someone has missed the bus, is there more to go?
First of all, you never miss the bus. I think the world is round, the bus will come and pick you up again. So don't worry about missing the bus. I can tell you that much. All right. And I think I sincerely believe that I think two things. One, due attributes to the chairman. I think he has transformed the Tata Group in a manner which investors have not seen. And I think that's the energy which was required has been brought to the fore, and addressing the capital market. Number two is, you never miss the bus. This is just the beginning. It's a flyer at this point of time. I'm not saying buy the shares. I just believe you hold it as a holding for disclosure purposes. But the fact is that the company became profitable after a decade in the last 1 year. That's one. Number two is, we underestimate the importance of JLR. Those brands are serious brands in the world of SUVs. They are premium brands, which are where the market is today in the global market at this point of time. So, we don't talk about it too much because we're discussing Marutis, etc. But I think those are serious global brands and underestimated, undervalued by India. I think there's a great story building here. I think it will be a global story over time, that India will have a global leading car company listed in India. I think it's a great story. It's just the beginning. Don't worry about it, guys. People who are very young, don't worry. You've not missed all the boats. The real one is still to come. It's going to be a flyer in my view. I'm not saying buy the shares. Our view is a global car company in India. I think it's going to be a great day. And a lot of people undervalue what happened at JLR. Those brands are serious.
Okay, all right. Hi, Ajay. Good to hear your thoughts on the auto space then. But if I'm not mistaken, I think you were quite positive on the ferrous names as well, the steel stocks. And, the near term, that could be some pain, but it appears the street is looking ahead because most of these stocks are at 52-week highs. What's the view from here on?
See, they have withstood huge amount of imports at this point of time. I think that was the biggest challenge in steel has always been imports. It's not about whether you can produce at a good price or sell at a good price. There is enough demand in this country. The issue has always been, can you withstand the power of imports? And I think they have done that. A little bit of tariff support here or there, and they can again go, beautifully higher. So to that extent, you got companies which take capacity build-up takes years to come in this industry at this point of time. And with the fewer players, none of them are showing any sign of price cutting in the market. Very mature, very good dealing in the market at this point of time. Nobody is fighting for market share by dropping prices at this point of time. So I think demand side, infrastructure, etc., remains robust. And on the supply side, their cost competition, they have been done a pretty good job in terms of capacities and best point, deleverage. These were heavily leveraged names 5 years back. Look at the balance sheet. Beautiful balance sheets now, deleverage. And guess what? The capital market, that's what gives the trigger to these stocks. Today, if they want to raise capital, they can easily raise a QIP in about 2 weeks' time. And that gives a fresh leg up to these companies, which require capital quite frequently to deleverage or borrow and projects, etc. So I think the setup is beautiful at this point of time. Now, tariff can change. If you take away some of the tariff barriers, they can get hit. If you put something, they can fly. But the point remains, they are strong players with beautiful balance sheets compared to the last 5 years back when they were weak players with bad balance sheets. And that gives us support to the fact that in the next 5 to 10 years, if India has to grow at 8% or 7 or whatever number you pick and choose, they will have a market.
Take all of that on board, Ajay, but what's the pick from here on? The call has gone right so far. From here on, what would you buy?
See, here on, we have made a call very clearly that India will be a story of defense stocks. Okay, for the next decade, I think defense will give a 10-bagger very clearly wherever you invest. It doesn't matter. There are not many companies to invest, and lots of smaller names come out, and at this point of time, and yesterday also 1 or 2 names became a unicorn in the market, which are old names. If you remember, I have the holding, but I can disclose Zen Technologies became a unicorn yesterday. So I think India, if our defense budgets are not going up drastically, 6 to 7%, matching the inflation, which means they have to buy Indian stuff at this point of time. And once they buy it, the spares make all the money. Maintenance spares make all the money to come in. So I think one single story is defense is going to be a biggest one for us at this point of time. And the second one, of course, is shipbuilding. I think there India has got a very small market share, is going to be a big share. So put together that and the supply of raw material chain, I think you're in a very safe end of the market. You don't have to worry whether the customer buys a Colgate toothpaste or a Promise toothpaste. These are longer term, much better ones.
Okay, all right. We'll leave it at that. Ajay, thanks a lot for joining us and speaking to us about individual stocks and the market as well.